Are you struggling to keep your small business finances organized? In this video, I'm going to show you how to break down accounting responsibilities and make it easier for you to track your spending and profits, and more importantly, reduce the opportunities for fraud. Hi, my name is Donna Harris, and today I'm here to talk to small business owners about the importance of segregating the accounting responsibility. As a financial expert, I've seen firsthand how important it is for businesses to have different people watch over their spending and income. If you're looking for an easy way to get more organized when it comes to your company's finances, then this video is perfect for you. So what does it mean to segregate accounting duties? Well, basically what that means is you do not have one single person running your whole business financially. So what we're looking for is, specifically when it comes to cash, everything does need to be segregated. So one of the challenges I've had is I've had clients that have hired us to do, say, payables management, and they thought that meant that we were going to pay out the bills for them. That's not the case. That's never the case. And this is why. When we are working on a client finances, especially payables or receivables, we want to make sure that everything is open and above board. So we want to do things like prepare an accounts payable statement and notify the business owner these bills need to be paid on this date. Right? That's what accounts payable management means to us. It doesn't mean that we're going to pay anything for you unless we have written authorization to do that. So what does that look like? Well, there are some online methods of payment that we could be authorized to use. However, we're not just going to pay the bills. That is something that has to be gone into in depth with the client, and to understand that if I'm preparing the bills for payment, I should not be paying the bills. So I have two ladies on my staff, Terry and Sammy. If Sammy is preparing the bills for payment, we want to keep that all in her court. So she will notify the business owner, and the business owner may give authorization for us to pay it. There's a multi-step process here. We want to have the report sent. We want to have something back from the business owner in writing saying, yes, go ahead and pay this amount from this account on this date. And then if we have a payment method on file, and that does have to be set up with the client, then and only then, Sammy won't pay those bills. Terry will pay them. So we want to make sure everything is segregated. Our preference to protect ourselves is to tell the business owner, these bills need to be paid. Would you like us to prepare a check? We can then prepare a check to be cut. It will sit in the print checks queue. And I do have clients email us invoices and things that they do want us to actually enter and get ready to pay. But we don't do the paying. Right? We prepare them. So we may even go so far as for a few of our clients, a very, very few of our clients, to prepare the checks. We may even print the checks, but we will never sign and mail the checks. In fact, I've turned down clients who said, well, I'll just give you a stamp with my signature. No, it's too easy to commit fraud. We are trying to reduce the opportunities for fraud down as low as possible and make sure that we are held accountable for everything. We do the same thing with receivables. We have some clients that we do a little bit of soft collections for. We have an attorney's office that we work with. We refer our clients to if they need hard collections done, if they need to get an attorney involved, we certainly can do that. We have we have the resources. But if, let's say, we are collecting for a client, we are not ever going to tell them, yeah, send it to our business address. All of that money has to be mailed to the client's office. We don't prepare deposits. We literally don't touch your money. We have to have written authorization all the way down the line, and I have to approve it. So I'm very particular about it because I've just seen too many headlines where I've seen bookkeepers skim millions of dollars from their clients or from their employers. These are usually someone who's employed full-time and they had full access to everything. And that is a recipe for disaster. I've also seen business owners, and I am not blameless on this. I'm so busy that they just can't get through all of their emails and stuff. And so they just say, just pay it all. We don't do that. We'll never do that. We're not going to do that. Oh, I've never, ever authorized that. I've actually had a client cancel services because we would not pay her bills for her, and she was frustrated, which I understand, but I was very clear from the get-go that we don't do that. We track your expenses. We can even prepare checks for you to print and sign, but we will not pay your bills for you. It's just too easy to commit fraud if we have that level of access. Like I said, same thing with receivables. Receivables must be sent to the client. If at any time we find out that a receivable amount has been sent anywhere else, then that employee is subject to disciplinary action. And I'm very, very picky about that. We also, the number one reason so many bookkeepers can get away with skimming from their employers, it's usually a full-time bookkeeper. It's usually someone who's in-house, and it's usually someone who isn't really accountable to anybody, is that we also, I'm going to call it turning the books, and we do that once a quarter. So every quarter, all of the clients get reassigned bookkeepers to someone they haven't had before, if there's one available. That bookkeeper then works on that for the next 3 months. That helps us because, and it helps our clients, because if one bookkeeper even had an idea that they might want to skim some money, they know that at the beginning of the next quarter, a different bookkeeper is going to be looking at the books. Most fraud schemes are dependent on being the only person looking at the books. Okay. Tax accountants are not a ton of help on that because we just give them the profit and loss. They don't know what's going on behind the scenes. Or we'll give them the profit and loss and balance sheet. They may not know what's going on behind the scenes. And it's easy to mask fraud as a legitimate business expense. But the bookkeepers who are in it up to their elbows, if they know they're going to be checked on, then the opportunity for fraud goes down. So that is a huge thing we do. Most of the time, when you see those headlines of a bookkeeper embezzled $2 million from her employer, they were caught because they went on vacation and someone else looked at the books. So the number one way that you as a business owner can make sure that your books are handled, that they're handled properly, and that the opportunities for fraud are minimized, very, very low, is to create these internal controls. And there's a lot of them. We can help you set them up for your specific business, and make sure that duties are segregated. We want to make sure that if you have a cash box or a till, that only one employee at a time is responsible for that, that there are procedures in place to deal with petty cash, to deal with registers. Again, I worked for a McDonald's, was my first job. One of my later jobs was as a supermarket cashier. And I do remember having to count my till before every shift and at the end of my shift to make sure that I started with the right amount of money, so we knew how much I had to begin with, and that I ended with the same amount of money plus my sales. Okay. And so what I mean by that is typically I had $20 to $50. So we'll use $20 for easy math. $20 in the till to start with to be able to make change. At the end of my shift, if I sold $2,000 worth of merchandise or services or whatever, then I should have $2,020 in my till. I might not have it in the same mix of currency that I did to begin with, but that's what I should have. And if I'm short, then I would get in trouble. The only person who had access to my till was me. I had a code that I would have to enter. Those things have not changed. They've changed into badges, but that hasn't changed. And that's important to do for everything. If you have a $100 petty cash box for incidental expenses and for making change, then at the end of the shift, you should have the $100 less any receipts for expenditures that you authorized. So I had a client that was an auto repair shop, and they would sometimes take petty cash to go buy gas for one of the cars. So they would say, and they would have to go to the boss. Actually, these guys did not have good internal controls, but ideally they would go to the boss and say, I need $20 for gas for the Corolla, and I would like you to authorize it, please. The boss would then sign an authorization. I'm authorizing this person to take $20 out, signed by the boss. And then the employee could take the $20 and they would have to come back and bring the receipt to go with the authorization. Then at the end of the night, they would count the till again, and they would say, we started with $100. We took in $2,000 in cash, but we spent $20. So we should have $2,080 and a receipt for $20, because we want to make sure that nobody is just dipping in because they were short of lunch money. Okay. So that's an example of some of the internal controls. The segregation of accounting duties is the biggest internal control you can have. It's the most important, short of controlling who has access to inventory. Not everybody should. I am going to start talking quite a bit more about fraud, and I'm going to start talking quite a bit more about financial literacy, so that you, as a business owner, can make smart decisions, informed decisions about. They may not be smart. I don't know. I don't know you, but I hope they're smart, and certainly we want them to be well informed about your business. You want to have all of the information at your fingertips, and you want to take advantage of things like your quarterly reviews that every single client that signs up with us should be having a quarterly review every single quarter. Doesn't matter when in the quarter, but once every 3 months, I want to talk to the clients. We want to make sure that everything is running well. If you're having a personality issue with one of your bookkeepers, let me assure you, that's only going to last for 3 months anyway. So just work through it, and then you will be working with a different one. We just want to make sure that we are minimizing any opportunities for fraud, not just from our side, but from the client side as well. We have caught business partners dipping into funds. We have caught business partners' wives removing funds from the business account for her own use. We've caught all of this. She had nothing to do with the business, but for some reason she was a signer on the account. We've caught all of this and been able to do something about it because, one, we do have multiple people looking at it, and two is that quarterly review is a very, very key element of the services that we offer. I've always offered this, and very few clients have taken advantage of it. So with that said, Thank you for coming to my TED Talk. And I'm with Bookkeeping Made Simple. If you would like us to do your books, our number is 801-692-0032, or you can visit us on the web at mysimplebookkeeping.com. Thanks, and I'm looking forward to talking to you soon.